Hello, and thank you for joining us today for the Federal Home Loan Bank of San Francisco's Affordable Housing Program General Fund Application Webinar for Owner Projects. We'll be going over the 2026 AHP General Fund Owner Occupied Application today. My name is Brandon Chan, and I'll be one of your presenters today. My colleagues Brandon Walker and Samantha Stallmeyer will also be presenting. This is our schedule for today. During this webinar, we will provide an overview of the bank and the Affordable Housing Program's General Fund. We'll then go over the changes to the program, application, and worksheets. We'll also give you some insights into how we score applications and how we review the financials in determining need for subsidy and feasibility. If you aren't already familiar with us, you might be wondering, what is the Federal Home Loan Bank of San Francisco? It's one of 11 cooperative lenders in the United States created by the U.S. government in the 1930s to ensure liquidity for home mortgage lenders. Our name is misleading. We are not a federal agency. We are a private company, though federally regulated, and we don't make home loans, and we aren't a bank that takes deposits. We are a cooperative wholesale bank that is owned by other retail financial institutions located within our district of California, Arizona, and Nevada. We make loans to our member banks that they then use to support housing and economic development, including home mortgages, construction loans, and small business loans. Since 1990, we have given at least 10% of our annual net income to our housing, economic development, and down payment assistance community investment grant programs. The Affordable Housing Program is the largest of these community investment programs. Out of that 10% annual contribution, the bank has awarded over $1.42 billion in AHP subsidies to produce over 156,600 units of affordable housing targeted to low and moderate income households. In 2023, we have also added a targeted fund that is specifically for Nevada projects. That fund is very similar to the general fund, but is covered in a different webinar. If you would like to know more about the Nevada Targeted Fund, reach out to one of the contacts listed at the end. So, just to let everyone know, in the 2025 General Fund competition, the bank gave away slightly more than $45 million. We received 132 applications and 26 received an award, which makes an approval rate of 20%. We can't disclose an exact amount, but are roughly estimating that our funds available this year will be similar to 2025. Although this webinar is focused on completing the application, we think it is helpful to give a brief overview of the AHP General Fund process. The application must be submitted in partnership between a sponsor and member. There is only one competition per year, and the upcoming 2026 application deadline is Tuesday, March 3rd at 5 p.m. Pacific Standard Time. Be aware that there is also a critical earlier deadline. Applicants must request a workspace in our secure portal for each project they would like to submit. The deadline for submitting a workspace request is Tuesday, February 24th at 5 p.m. Pacific Standard Time. If you miss this deadline and do not request a workspace by February 24th, you will not be able to apply. The award announcements will be made in late June. Once an award is approved, both the sponsor and member must attend a compliance webinar prior to requesting the disbursements of the funds. Attendance at a compliance webinar is valid for 2 years. Note that the compliance webinar is different than this application webinar, and our next one will be held in July. Once a project has all pertinent sources of financing secured, construction is imminent, and the sponsor and member have attended a compliance webinar, the sponsor and member can request disbursement of the AHP funds. Every 6 months, until project completion, members and sponsors must complete a project progress report called the semi-annual survey. Awardees must complete construction, draw down and expend the HP funds, and have home buyers close escrow on their homes within 4 years of award approval. A project must show reasonable progress towards completion to maintain the HP subsidy. Once construction is complete and the HP award has been funded, the bank will conduct compliance monitoring called initial monitoring to confirm that the project fulfilled the commitments made in its original application. A request for initial monitoring documentation will be sent 6 to 18 months after the project is complete. Upon project completion, the income retention and compliance period for each unit will be in place for 5 years. Please make sure to refer to our policy updates located under the HP section on our website, as they will provide important policy guidance for the HP process. Now we'll go over some basic program information. The HP is a source of gap financing for projects, and the maximum award amount for a project remains $2 million for our 2026 AHP funding round. Because members and sponsors apply together, they are partners throughout the life of the award. If you are really struggling to find a member to partner with, we can help put you in touch with a member bank in your area. However, it is usually easiest to partner with an organization you already have a relationship with. A complete list of our members can be found on our website. If you need help finding a member bank on our project, please reach out to us offline. The AHP award is a subsidy structured in the form of a forgivable loan secured by the member in the form of a promissory note and deed of trust. The AHP can only be used to assist those households at or below 80% AMI, and the program is structured in a way that rental and homeownership projects compete together, meaning that there is no specific set aside for either project type. The AHP can be used to cover acquisition, construction, or rehabilitation costs for rental or owner-occupied projects. AHP awarded projects are required to fulfill scoring commitments. If there are project changes after the award is made that affect scoring, a modification must be requested. A project must demonstrate a financing gap and that it will be financially feasible at all phases. If the project receives AHP funding, it must continue to demonstrate a gap at the time of disbursement and at the time of compliance monitoring. Again, a project has 4 years to utilize the AHP, complete construction, and have all home buyers close escrow. The bank will review the project status twice a year and follow up directly with projects that do not demonstrate reasonable progress or the ability to finish in 4 years. Projects awarded AHP funding must comply with fair housing and affirmative marking requirements. Projects that are already complete, as in those with a temporary or final certificate of occupancy or notice of completion at the time of the application deadline, are ineligible to apply for AHP. Projects will also be ineligible if the closing to the home buyer has already occurred. For projects that already have an existing HP award that need additional funds and are not yet complete, you can now reapply for a higher award amount without withdrawing your project. If you have not received disbursement of your award, if you have not received disbursement of your award. If your project is complete and within its AHP retention period, you may not apply for a new AHP award until after the retention period ends. As we look ahead to 2026, you'll notice that we have implemented a few changes to ensure awards remain reasonable and consistent across applicants. Starting this year, sponsors may receive awards for no more than 2 projects per round, which will be the 2 highest scoring projects submitted. Awards will also be capped at no more than 50% of a project's total development cost, TDC. We now also have a hard cap on subsidy per unit, which is $100,000 for owner projects. A big change this year is that resubmission for a higher award amount are now allowed without having to withdraw first, as long as a project is still in construction, meaning it hasn't received a temporary certificate of occupancy or final permit sign-off without AHP funds dispersed. If the new application is approved and the new subsidy amount, the existing award will be withdrawn. A completed project with an existing HP award from FHL Bank San Francisco or another FHL bank still may not submit a new application in the general fund if the project is still within its original HP retention period. For our donated property section, we have revised and slightly increased our allowable ground lease amount, which is now $100 per year. Since donated property is one of our more complicated scoring categories, we have that it's also worth a large amount of points. We are now being more explicit about what types of transfers do not qualify for points in this area. This includes rehab projects that do not involve an acquisition from a third party, i.e., you already own a property that you want to rehab. Any kind of property transfers with strings attached. This includes properties purchased with a loan from local government, even if the loan only has residual receipt payments due and the project does not have enough cash flow to pay any residual receipts. The same would be true for land leases with residual receipt payments. You also will not get credit for funds donated by a private party to purchase a property. The property itself would need to be donated to get credit. Annual compliance or other fees that exceed the $100 per year allowable amount would also not receive credit. We have also seen a couple of instances where the sponsor originally purchased the property, then the local government acquired the property from the sponsor and then donated it back to them. This or similar situations also do not qualify for points because the original acquisition of the property was not a donation. For nonprofit sponsorship scoring, the emerging minority owned business enterprise or women-owned enterprise developer subcategory has been removed from our general fund framework as part of this year's update. With this change, the category will now be worth 7 points instead of 9 points. Moving on to our homeless scoring category, we have had consistent compliance issues getting homeless documentation for occupied rehabs of permanent housing where the formerly homeless household has already lived in the unit for many years. Because of those issues, we are now limiting the number of units you can get homeless credit for in an occupied rehab to the number of vacant units in the project at time of application. This does not apply to tribal rehab projects since their homeless definition is broader. We have also further refined our homeless housing category to align more broadly with other project funders' homeless definitions. The fifth definition of homelessness now uses the term serious illness in place of serious mental illnesses to align with new private sources that fund housing for individuals who may not have mental health issues but are still at risk of homelessness and frequent participants in the healthcare system. We have added a new definition to include an individual or family who is defined as homeless under state, local, or federal rules and regulation, or under guidelines from other project funder in case there is another project funding source that is defining homelessness already that doesn't quite fit into other definitions. The seventh definition of homelessness that applies to tribal projects have also been revised to make clear that tribes can also use the definitions in their tribal admissions and occupancy standards. This year, we've made a number of revisions to our community stability category to align more closely with other project funders, close existing scoring gaps, simplify scoring and documentation requirements, and introduce opportunity zones as an additional point option. To ensure that a project's renovation scope is significant, residential rehabilitation projects are no longer eligible to receive infill points. They will instead need to meet $25,000 per unit threshold outlined under substantial rehabilitation. For adaptive reuse, these projects must demonstrate that at least 75% of the project units are newly created housing units to be eligible for credit. Projects that are already operational as housing, such as motel or hotel conversions that have already been put into use as more permanent housing, are not eligible for credit since they are already being used in their new capacity. Additionally, the scope of work on the adaptive reuse project must be substantial enough to require a construction permit. This is now also true for projects seeking credit under substantial rehabilitation. If the scope of work is light enough that no permits are required, points will not be awarded. We have made revisions and additions to our economic development strategy and proximity to amenities subcategories that you may be happy to hear. For opportunity zones, projects located in opportunity zones will be eligible for 2 points as part of our community revitalization subcategory. For transit and amenities, we have updated scoring criteria to increase the allowable radius from a third mile to a half mile. All distance measurements must continue to be verified using third-party sources with a clear third-party scale. Documentation requirements have been revised to eliminate the submission of transit route maps, and we have codified our longstanding practice that amenities must be relevant to the proposed project to qualify for points. We have also removed the prior square footage requirement for grocery stores so that smaller local establishments that provide the same type of products as a larger store can also get credit. A grocery store is now defined as a retail establishment that sells staples, fresh meat, and fresh produce. This can also include the grocery section of a larger big box store. In the Sustainable Development Scoring section, we have removed the 4-point net zero category since we had very few projects apply for these points. Additionally, because of issues we have seen in projects successfully getting certified, adaptive reuse projects can no longer receive Sustainable Development points. Under home ownership and economic integration, we have removed 1 point for lease-to-own rental projects since this element is challenging to enforce. Owner projects that were previously awarded 1 point in this area will now get 7 points in the home purchase category instead. For our minimizing household displacement subcategory, we have also made a minor revision to allow projects without an official relocation plan the ability to outline their relocation efforts within the AHP application and not upload another document, hopefully somewhat streamlining that element. This year, we have also made a few updates to our project readiness and native housing to better align with the current market. For project readiness, we have removed our point option for identified home buyers on ownership projects. We have also removed our point option for scattered site down payment assistant owner-occupied projects that do not involve construction, as we have not seen this type of project submitted in over 10 years. For native housing, we have updated our language to ensure clarity that only one of the listed eligibility criteria is required to receive points. So if you have a tribal project owner, you do not need to also have a tribal funding source in this project. Subsidy per unit. We have made a few updates to our subsidy per unit scoring category that include the subsidy per unit scoring category value has now been increased from 3 to 4 points. We have also updated scoring for owner-occupied projects so that projects requesting $60,000 or less per unit will receive the maximum points, with 1 point deducted for requests between $60,000 and $100,000 per unit. We have also introduced the following change to one of our feasibility benchmarks for owner projects. The developer fee upper limit has been increased to 17% for the general fund. Now we're going to jump into the application. Here are a few things to keep in mind while filling out the application form. The application automatically adjusts based on the characteristics of your project. Progress in filling out the application is tracked at the top of the workbook and in each section. Applicants can easily jump between sections through hyperlinks within the document. Through icons next to each data field, the form will also tell applicants what information is required and if each section is completed correctly. Make sure to read the instructions for each section and understand the scoring category requirements. Don't forget to reference and upload backup documentation if required for a scoring category. Too often, points are not awarded because documentation was not provided. Unfortunately, we cannot contact you during the round to ask for missing documentation. Address all error or warning messages. The application form is intended to help you get the right information in the right data format for us to score your application. Data fields with error messages will not be scored. Make sure that the information is consistent. For example, the targeting in the application should match the targeting in the financial worksheets. Inconsistent information may result in loss of points. Make sure that your application is 100% filled out before you upload your final version. This will, this will be noted by the progress bar at the top of the worksheet. Almost all the questions require an affirmative or negative response, even if the question doesn't apply to your project. Remember that it's best to fill out the application questions sequentially to avoid formula errors. There are maximum character limits for some text boxes on the application. The text boxes should have enough space for the appropriate responses. However, if you have more to write, you can upload separate additional documents. The application now provides an estimated score to be used as a reference only. However, just to note, the bank will make the final determination in the awarding of points. The interpretation and implementation of scoring criteria is at the bank's sole discretion. Application documents must be submitted electronically through our secure online portal. To get started, the member and sponsor must complete and submit a request for a project-specific workspace folder on the secure portal for each application by 5 p.m. on Tuesday, February 24th, 2026. If you do not have a workspace, you will not be able to apply. For each application, the member and sponsor can authorize up to 5 employees to submit documents to the secure portal workspace. We will notify the designated member and sponsor representative via email to complete authentication to get access for each workspace. The portal users will have to click on the link in the email and follow the instructions. Keep the application form and financial workbook as Excel files in the appropriate format. Some things to keep in mind when uploading documents. Make sure documents that need a signature have a scanned signature. Do not rename, move, or delete the folders. This can cause us not to receive your documents, which could jeopardize your project score. Do not restore files from the workspace recycle bin, as this can also cause errors. If you re-upload updated documents to the same folder, it will overwrite the existing one. Do not submit documents without redacting personal information such as SSN, driver's license number, or bank account numbers. Do not upload encrypted documents because they cannot be imported into our system. Make sure that everything you upload by Tuesday, March 3rd is what you intend to submit. You will not be able to upload anything after that. Note that there is no submit button in the portal. Whatever is uploaded in your workspace on the deadline is your final application package. Lastly, make sure that the secure online portal website is not blocked by your IT department or have them unblock it so you can access the workspace. Here is an example of what a workspace looks like. When you're uploading files, you also want to make sure that there's only one PDF per folder as shown on the right. Technically, you can upload a bunch of documents to the folder as shown on the left, but since there is only one file that can be accepted into our system, you'll want to make sure you'll combine those multiple files into one. If you upload multiple documents, it is likely that they will not all be received and reviewed by our team, and you may lose points in that category and not receive an award. Remember that we cannot contact you during scoring. As we go through the application, this is how the total 100 points for the application are allocated. Most of the categories are straightforward. All categories are self-scorable in the application. It's actually impossible to get all 100 points since this is an open competitive application with both rental and owner-occupied projects competing side by side. This keeps the scoring balanced and levels the playing field for both types of project. You can refer to the scoring result PDF provided in the application package to see how projects scored in each area in the most recent funding round. Be aware that we do not have enough time to contact you during scoring, so please double check that your submitted documentation is uploaded and clearly shows that your project meets the requirement of the category. If documentation is insufficient, we will not be able to award points. So next, I'll pass it over to Brandon to go over the scoring categories. Feel free to follow along with a copy of the application open in front of you.
Thank you, Brandon. Our first scoring category is targeting. Targeting is worth up to 20 points, which is the largest number of points possible in any one category. Rental and owner projects are scored separately. This is an extremely competitive category, meaning most approved applications receive full or near full points. An owner occupied project must have all units restricted at or below 80% of AMI to be eligible for AHP funding. Projects will be scored using the following scale. If 20% or more of the units are for households at or below 65% of AMI, the project scores 20 points. If less than 20% of the units are for households at or below 65% of AMI, the project scores 18 points. On the application, you will enter only the number of income restricted units and their corresponding AMI levels into the yellow shaded cells in the table. The gray cells will be activated and turn yellow once the number of units are entered into the cells. Make sure to enter only whole numbers with no decimal places or you will get an error. Information in this section must be consistent with the Targeting and Financing Sources worksheet in the workbook. Donated property is the next category. Points will not be awarded if less than 20% of the project's units or land associated with the project meets the category criteria. Points can be prorated if not all the units qualify. There are three situations that qualify for points. The first is a straight donation. If the site is acquired or to be acquired from an unrelated third party for $1,000 or less, a long-term land lease is executed for $100 or less in annual payments over the 5 years, then the application is eligible for up to 5 points. If this scenario is relevant to your project, complete the first section titled Donation of Property. Next is acquisition of property from a federal agency. If land is conveyed from a federal agency at a price greater than $1,000, then 1 point will be awarded. If this is the case for your project, complete the middle section. The third way to get points is if land was acquired from an unrelated third party at a significant discount to fair market value. So, for example, if you have a property with a fair market value of $1 million and your purchase price is $200,000 or 20% of fair market value, you receive 1 point. If the purchase price is $150,000 or 15% of the fair market value, you receive 2 points. If the purchase price is $100,000 or 10% of fair market value, you receive 3 points. If the purchase price is $50,000 or less, or 5% or less of the fair market value, you receive 4 points. If the scenario fits your project, fill out the third section under donated property called acquisition of property below fair market value. For all these situations, the donation or conveyance must be an arm's length transaction. In other words, the sale or transfer of a property from a nonprofit developer to its affiliate would not be eligible for points. Donations cannot come with any financial conditions or strings attached, such as a loan or other payment conditions. As we noted earlier, the implementation plan now includes specific examples of what types of property transfers do not qualify for donated points, which we covered earlier in the session under changes for 2026. Transfer of title from donor to the sponsor does not have to take place prior to submission of the application to receive credit, but you do need to submit documentation to get points. If the property has not yet been donated but will be at a future date, the bank will give credit for legally binding, fully executed purchase contracts, lease agreements, and options or an exclusive right to negotiate that includes specific purchase or lease costs. Note that a letter of intent to donate the property is not binding and therefore would not be eligible for points. As a reminder, points will be deducted if the transaction doesn't materialize, and a reduction in points could jeopardize your award. So you want to make sure that the donation is a sure thing when requesting points under this category. For acquisitions at an amount significantly below fair market value, an appraisal must be submitted with the application and must have been completed by an appraiser certified within the state where the project is located. Also, the appraisal valuation date must be within 6 months of the acquisition agreement date. Information on the support documentation should be consistent with the address and APNs included in your application. Make sure that there is a clear linkage between the parties and the documentation submitted. Also, make sure the donated and conveyed amount is consistently reflected in the development budget. This is a link between scoring and a financial review. We do confirm that there are no acquisition costs or that there is just a nominal cost in the budget. For properties that were donated or conveyed at a nominal or below market price prior to the application, transaction consummation must have occurred within 5 years of the application deadline or start of construction, whichever is earlier. Under the donated or conveyed property section of the application, you must enter the number of units that apply to each situation. If none of the situations apply, you must enter 0. The next category is nonprofit sponsorship, which is worth 7 points. This is an overview of how the 7 points are allocated in this category. First, the bank has discretion in determining whether a nonprofit sponsor meets the category and general sponsor eligibility threshold requirements. If the nonprofit status of an organization is a threshold criterion, and you will be eligible for the remaining points of the two statements under the sponsor classification section are true, and you are a qualifying organization. The general sponsor eligibility requirements are: the sponsor has been engaged in the ownership, management, or development of affordable housing for a minimum of 1 year. The sponsor has sufficient capacity and staff experience to perform project roles and integral responsibilities. The sponsor be integrally involved in the project, such as by exercising control over planning, development, or management of the project, or by qualifying borrowers and providing or arranging financing for owners of the units. For not-for-profit organizations or government entities, the project sponsor must be the parent organization and not an affiliate organization. Please note the entities that qualify for points are a nonprofit organization, Native American tribe, an Alaskan Native tribe, or the government entity for Native Hawaiian homelands, a state housing agency, local housing authority, and a state or political subdivision of a state. Owner-occupied projects, there is a regulatory requirement that the project sponsor must be integrally involved in the project. The first 4 points are based on the nonprofit sponsor's material involvement in the project. See the provided list of integral responsibilities in our implementation plan. Obtaining the full 4 points is accomplished by fulfilling 4 of the 8 listed responsibilities. Most of the time, the nonprofit sponsors of each owner-occupied projects are involved in more than 4 activities. Each item is worth 1 point, but you can only receive up to 4 points. Note that you should provide a detailed description of the nonprofit's involvement in the project sponsor profile section of the application, and make sure that the narrative is consistent with the boxes checked under nonprofit sponsorship scoring category. Do not just restate that the entity will be involved in just these items, but provide details of specific activities. The next 3 points are awarded based on the percentage of the total available developer fee received by the nonprofit sponsor. The developer fee received is the quantitative side of the nonprofit sponsor's integral involvement just noted. If the nonprofit sponsor receives equal to or greater than 25% of the fee, or if there is no developer fee, then 3 points are awarded. If the nonprofit sponsor receives less than 25% of the total available developer fee, then 0 points are awarded. Make sure to select the correct response here. If you respond that the project has no developer fee and we know a developer fee in the budget, you might not receive the 3 points. As proof of tax exempt status, a nonprofit organization must submit IRS 501c3 letter, or you can submit a state franchise tax board letter. Bank does not accept bylaws or articles of incorporation as a substitute for showing tax exempt status. If there is an entity name change, please submit the updated IRS documentation. If the sponsor is a government or tribal entity, then no documents are required. As a reminder from our earlier changes effective in 2026 discussions, we have removed our minority or women-owned developer category. Now, I'll turn it over to Samantha to continue going through the general fund scoring categories.
Thank you, Brandon. If at least 20% of units are reserved for first-time homebuyers, then you can get up to 7 points. All points will be prorated based on the percent of units set aside for first-time homebuyers. Our definition of a first-time homebuyer is listed here, and qualified homebuyers must meet one of these criteria. The next category is homeless housing and has a maximum of 6 points. Although rare for owner-occupied housing, points can be awarded to projects that create homeownership opportunities for homeless individuals or households. For all the details, including documentation required at initial monitoring, please review this scoring category in the implementation plan or see the homeless portion of our rental webinar if this applies to your project. The next category is special needs. Up to 5 points are awarded based on the percentage of units reserved for special needs populations, those that fall into the 5 categories listed here. A minimum of 20% of the units must be reserved to get any points, and points will be prorated if not all units apply. For example, if 50% of the units are reserved for one or a combination of these populations, you get 50% of the points. There's no double counting for this category. As you can see from the application, there are multiple categories possible. You will not receive credit for more than one designation for the same unit. More than one of these designations can apply to the same unit, but you will get an error message if the number of units input into the application exceeds the total number of units in the project. Also, please note that in the financial workbook, the units set aside for special needs households must be indicated on the targeting and financing sources worksheet. To get points, they must match what is indicated on the application. Here we have our large units category. Similar to homeless and special needs, at least 20% of total units must have 3 or more bedrooms to qualify for 3 points in this category. For example, if 12 of 45 total project units have 3 or more bedrooms, the calculation would be 12 3 or more bedroom units divided by 45 total project restricted and non-restricted units equals 27%. Units must be consistent on both the application and targeting worksheet in the financial workbook. Rural housing is a pretty straightforward category. If at least 20% of the units are in a rural area as deemed by a government agency, then you can receive up to 5 points. Points are prorated in this category. In the application, list or describe the agency designating the area as rural after the number of units are typed in. Rural status can be designated by a state or federal government agency such as the USDA. USDA provides this information on their website under Rural Services. You must submit documentation from the designating entity to support your claim. If this information is not provided, the response is considered incomplete and points will not be awarded. In Arizona, rural areas can be designated by a Native American tribal entity. The next category is promotion of empowerment. The purpose of this section is to see how your project will financially or economically empower the home buyers through programs or services. There are 7 services or programs. Each service or program is worth 5 points. Review the instructions and the notes following each question in the application. Much of the information we want to see in the submitted documentation is outlined there. You get 5 points if you meet the scoring guidelines. If you don't meet the threshold, then you get 0 points. There will not be any prorated or partial points given in this category. All services must be of a regular and ongoing nature. Also, all services must be free to all residents except for childcare. Services must be available within 6 months of the project's completion, except for pre-purchase homeownership counseling, which we would expect to be offered before the home buyers close escrow. Documentation is required at initial monitoring to substantiate the provision of services. If the sponsor is providing the services themselves, then a detailed service plan must be provided. To get credit for a sponsor-provided service, the organization must have in-house capacity to provide the service, with staff that has an appropriate knowledge and expertise. Use the organization's letterhead and then date and sign the services plan. If the project sponsor hires or contracts with a third-party service provider, then the documentation must include one of the following documents: a memorandum of understanding, or MOU, between the sponsor and the third-party organization, an executed service contract, or a letter of commitment. These documents must list the services and funds which partnering agencies have agreed to provide. Service commitment documents must be dated within 1 year of the application deadline. If you have an MOU that was executed beyond the 1 year, but the services detailed in the MOU will still be provided to the project residents, then you can have the partner or service provider submit a current cover letter stating that the MOU is still valid and all indicated services will still be provided. Letters of support are not acceptable documentation for provision of services in the empowerment section because they are not a commitment but are more like references. For example, this includes letters written by people or organizations that support the project sponsor in its work, but are not formalized commitments outlining the provision of services. Also, you must complete the empowerment budget worksheet, which should show annual projected expenses of the service, and you must indicate how the project will pay for these expenses. If this is not filled out, no points will be awarded. This budget is included in the financial workbook, so please fill out this worksheet instead of submitting a separate budget. For the sweat equity feature, remember to input the number of hours in the targeting and financing worksheet and submit the sweat equity agreement template to be used. Do not just assume we know you will provide the services of pre and post home ownership counseling. Submit documentation with a curriculum for the counseling program. If another entity is providing the service, submit the documents we talked about earlier with details about the provider's curriculum. Next, Brandon will go through the community stability category.
Thank you, Samantha. The community stability category is about determining how your project benefits the community at large and contributes to stabilizing the neighborhood. The category is worth up to 14 points. There are 6 main community stability features with specific elements under each feature that you can select. The specific point allocation for each feature can also be found in the scoring guidelines in Attachment B of the bank's implementation plan. No partial points will be given, and you must submit required support documentation for each selected element to receive points. Like the rest of the application, even if some of the questions do not apply to the project, you will have to confirm that the question does not apply to the project. So let's look at the feature a little more closely and we'll go over how the points are allocated. To receive the maximum 3 points under this feature, your project must involve development on an infill site or adaptive reuse of an existing non-residential building or substantial rehabilitation. The points will be awarded if you select one of these elements and submit the required documentation. Under development of an infill site, a recent aerial photo of the site showing the outline of the entire site must be provided to receive points. Otherwise, we may have trouble determining the boundaries of the site and would not be able to award points. As noted earlier, residential rehab projects are no longer allowed to request points in this area. For a site to be considered infill development, it must have been previously developed or on a vacant site where at least 50% of its perimeter must adjoin parcels that are already developed with existing urban uses. The photo included in this slide is a great example of documentation for infill points. The photo clearly shows the project site with an outline and all adjacent uses are clearly urban. For adaptive reuse projects, you will need to submit either photos or other documentation, clearly showing the extent to which the project involves adaptive reuse. We will also need to see evidence that 75% of the project units will also be newly created. The qualification criteria for substantial rehabilitation points is based on a project's hard cost per unit, at least $25,000, which will be confirmed in the financial worksheets. For adaptive reuse and substantial rehabilitation credit, if the project is already under construction or permit ready, we would also need to see permits to confirm that the scope of work is substantial. This subcategory is worth 2 points. To qualify for points for any area that is not an opportunity zone, the bank's community revitalization or economic development plan area form must be signed by an appropriate planning official and confirm that the plan meets the required criteria. You must meet the following. As of the application deadline, a government entity has formally adopted a plan to revitalize a defined geographic area containing the proposed site. A standard housing element or general plan is ineligible unless it contains a specific revitalization area where the site will be located. The project proposed in the application would contribute to one or more of the plan's stated goals. A government entity has made or is committed to making specific investments in non-housing infrastructures, amenities, or services beyond developing the proposed project. The project benefits from incentives such as streamlined entitlement process, additional funding, or relaxed design requirements by being inside the boundaries of the plan. If the project is located in an opportunity zone, please provide the printouts from HUD's Opportunity Zone Map or the website of the Internal Revenue Service (IRS) showing that all of the project addresses are in the opportunity zones. Being located near transit and amenities is worth up to 4 points. For the transit element, a project must now be located within half a mile radius of the specific transit stop. All distant measurements must continue to be verified using third-party sources. Half a point up to a maximum of 2 points will be awarded for each transit service or line. Like the transit component, to receive points under amenities, a project must be located within half a mile radius of the specific amenities that are appropriate and accessible to the project's residents. For example, the project may be located next to an elementary school, but if the population is 100% seniors, no point would be awarded for that amenity. Half a point up to a maximum of 2 points will be awarded for each of the 8 amenities listed. Note that you will not receive more than one half of each of the categories as shown on the slide. If there are 3 parks near your development, you will still receive only one half point. Some important things to keep in mind. To receive points under this, feature the transit service or amenity must be in place at the time of application. Documentation requirements have been revised to eliminate the submission of transit route maps. As noted earlier, the prior square footage requirement for grocery stores has been removed. A grocery store is now defined as a retail establishment that sells staples, fresh meat, and fresh produce. You will need to provide a screenshot from Google, WalkScore, or another mapping software clearly showing the number of transit lines and the project's distance relative to those transit lines. The map must be legible and have a clear third-party scale and legend. Applications with non-continuous scattered site addresses will need to include multiple maps showing the distance from each property address to each relevant transit line and amenity. Again, the application outlines how the distance to transit and amenities should be measured and the required documentation. No points will be awarded without documentation or if your documentation is missing information needed to determine distance or destination, or if it's lacking a third-party scale. Here is a good example of documentation for a number of transit lines near the project. This example clearly shows where the project site is, the distance radius surrounding the project, half a mile, and the distinct transit lines that are within that area. It also shows a clear scale and legend from a third party. It is very important for both transit and amenities documentation that the third party scale and legend is included, as we often see projects lose points in this area because the third party scale was missing. This gives us certainty that the information provided is accurate, otherwise we can't tell if it was just created by the applicant. Sustainable development is worth between 1 and 3 points based on the level of certification achieved by the project. The Nevada Housing Division's Silver State Sustainable Home Certifications is also included as an accepted certification and will be awarded 1, 2, or 3 points depending on the level of certification. We will also accept LEED, Greenpoint, or Enterprise Community certification and HERS improvement for rehabs only. One important thing I would like to emphasize is that you should not overcommit here. If the commitment is not met, this would lead to a future project modification involving a loss of points, which could jeopardize the project's award. It's because of this issue that adaptive reuse projects are no longer eligible to request sustainable development points. Also, be aware that new construction projects are not eligible for points related to improvement over an existing HERS rating. Scoring credit for this type of certification is limited to renovations. This feature is worth up to 1 point. 1 point will be given for a project being located in a high resource area. The location of a project needs to be in a high or highest resource area where this designation exists. For example, in California, using the TCAX Opportunity Area Map as shown on this slide, or to an upper income census tract in areas that do not have this type of designation. California projects must provide a printout of the state's opportunity map. Non-California projects must provide a printout of the project census tract from the website of the Federal Financial Institution Examination Council showing the project's location in an upper income census tract. Do not miss out on points for a location in the indicated areas. Even if you are sure your project is in a low income census tract area, go to the FFIEC or California Tax Credit Agency's Opportunity Map website and enter the project's address to confirm. All project units, including scattered site projects, must be in a high or highest resource area or upper income census tract to qualify for points. Note that you may choose to utilize the census tract income designation or resource designation from the high or highest resource maps in effect when the initial site control was obtained up to 7 calendar years prior to the application. If you go this route, make sure to make this intent clear in your Evidence of Community Stability PDF and also include the site control documentation along with the older maps. Now we get to our last community stability subcategory for preventing and minimizing household displacement. 1 point will be awarded for no household displacement for a site that is vacant and unoccupied, or that the project site is occupied and an acceptable relocation plan is in place. To receive 1 point for no displacement, you must provide a written explanation of the project site's history and confirm why no displacement is taking place. To receive 1 point for displacement or relocation, you must submit a relocation plan, though a relocation plan is only required for the residential displacements. We have made minor revisions this year to allow projects without official relocation plans the ability to outline the relocation efforts within the AHP application and not upload another document. If a project involves relocation, then we expect to also see the relocation expenses in the budget, which we'll go into detail about in the next slide. The implementation plan provides specific requirements for relocation. Again, this is only required for residential displacement. If a project is required to go through a relocation plan process by one of its other funders, this should be straightforward as you can just submit a relocation plan that has been approved by that funder as noted here. If you do not have a plan approved by a federal, state, or local government funders, you can outline your relocation efforts in the application, making sure you adequately address all the points in the slide. This applies to temporary relocation within a building as well as permanent relocation and relocation where households are moved out of the project for a period of time where work is completed. We recognize that not all elements are necessary for all types of relocation. So if an element is not appropriate, include a brief explanation why it is not necessary for your project's relocation plan. That brings us to the end of community stability, which clearly offers a variety of avenues for your project to receive points. That concludes the community stability category, and I'll pass it back to Brandon to finish out the rest of the scoring categories.
Thank you, Brandon. Next, we have the project readiness category, where points are awarded to projects that have demonstrated viability by meeting certain development milestones, obtaining site control, and being permit ready or having building permits. The questions are ordered sequentially to match these milestones, and you must get points in the preceding question before qualifying for the next question. Points are also prorated if the questions are not applicable to all units. 3 points are awarded for full site control. Documentation must be submitted as evidence for the different options listed in the application. A final settlement statement, grant deed, lease agreement, title insurance policy, executed disposition and development agreement, or title report. 2 points are awarded for partial site control as evidenced by an executed purchase agreement, option to purchase agreement, or exclusive right to negotiate agreement, ERNA. Again, documentation must be submitted to receive points. Documentation must be fully executed and valid and is required for all parcels. It must be clear that the project sponsor or partners have site control on the documentation, or additional evidence must be provided showing that there is a link to the sponsor. Make sure that the addresses and assessor parcel numbers or APNs, dates, and signatures are consistent and, on all forms, as appropriate, especially if this information is in an exhibit. If you receive points for full site control, then you qualify for points under building permit issuance or building permit readiness. The building permit readiness form must be signed by the building department to receive 3 points, whether you have actual permits or a permit ready letter. Only the form needs to be signed, and you do not need to attach the actual permits or ready letter itself. For projects on Native American tribal lands, a proxy letter from the tribal council or entity is acceptable in lieu of the building permit readiness form. Just a note here, a new form must be submitted every time the application is submitted. Also, if you only have partial site control, you will not qualify for points for having a building permit readiness letter. On the application, even if some of the questions do not apply to the project, you will have to indicate that zero number of units apply under the question. This is a very straightforward category. Points are not prorated, but are tiered. Basically, if you have a project in California or Nevada, you will receive 5 points. If your project is in Arizona, you will receive 8 points. If the project is located anywhere else, you will receive 0 points. On the application form, the question is automatically answered based on the project address provided. This category is designed to support development located on tribal land or developed by tribal entities. Projects where all units meet at least one of the criteria listed on the slide will be eligible for points. Project owner can be a tribal government, an agency of a tribal government, a tribally designated housing entity for the purpose of the Native American Housing Assistance and Self-Determination Act, or an entity incorporated created in accordance with tribal law, which includes tribes awaiting federal recognition and California tribes who have had their tribal status revoked by the Ranchera Act of 1958. This is a very easy way to get points in this category. Alternatively, you can get points if tribal funding is included as a source of funding for the proposed project, such as Indian CDBG, Indian CSBG, Indian Health Service funds, or NASDA funding. The amount of tribal funding included in the sources of funds must be an amount equal to or greater than lesser of 5% of the project's total development costs, or $100,000. While we haven't gotten a project submitted from Hawaii in a while, you could also receive points if the project is in a Hawaiian homeland housing area. The subsidy per unit category has been increased by 1 point and is now worth 4 points. Since this is a competition, you get more points by the less subsidy per unit you request. Basically, the score is calculated by taking the amount of subsidy requested divided by the number of income restricted units. The scoring for rental and owner projects is different. For owner-occupied projects, to get points, the range is up to $100,000 per unit, with the full 4 points awarded for projects requesting $60,000 per unit, or below, and 3 points for projects requesting between $60,000 and $100,000 per unit. If your project is requesting more than $100,000 per unit, it will be ineligible. The category is scored when you enter the amount of subsidy requested in the beginning of the application and complete the targeting scoring section. We often get the question, how much should I request? And we encourage applicants to request what the project truly needs to fill the gap. However, you may need to balance what your project needs with what score will make your project most competitive. Okay, now that concludes the review for all the scoring categories. This slide will show you a breakdown of each scoring category in the application e-form and is found at the end of the application. Make sure you review this summary to ensure that everything has been entered accurately and the score reflects what you think it should. You can also use this tool to evaluate how competitive your application will be when comparing your project's estimated score with the scores of previous years. With this example project, scoring fell way below the funding threshold established in prior years. There is no way to predict what range of scores will be in any given year, but you might not want to spend your time on submitting an application if you're estimating a score like this that is significantly below previous rounds. In this next part of the webinar, we will provide information on how we evaluate a project's need for subsidy and feasibility and go over the financial worksheets. Not only do applications have to score well, but they must also meet the Federal Home Loan Bank standards to demonstrate that the amount of subsidy requested is truly needed and that the project is also financially feasible. In determining need for subsidy, we look at the financials to make sure that the project demonstrates a financing gap. We look at the project's financing structure and development costs to see that AHP is filling a project's financing needs that's not covered by other funding sources, and that the project is only asking for enough AHP to truly fill the gap. We look to see that project sources of funding, including the AHP, equals to their projected development cost. For financial feasibility, we make sure that there are no remaining financing gaps after AHP is factored in. We review expected homebuyer monthly housing payments and home sales prices to make sure those homebuyers can afford the units and that projected home prices are reasonable. For financial benchmarks to help us evaluate need for subsidy and feasibility, we use a set of financial benchmarks that projects must meet, such as construction cost per square foot. If your project deviates from a benchmark, an explanation must be provided, and we often require third-party documentation. And please be aware of the note at the bottom of the slide. Project must demonstrate need for subsidy and financial feasibility at application, disbursement, and compliance monitoring. If your project has cost savings or receives additional unexpected funding, this could result in required repayment of the subsidy. There are several factors at play here, so please contact us if you think you may have a need for subsidy issue after you are awarded funds. In evaluating need for subsidy and financial feasibility for owner-occupied projects, some of the main items we look at are whether or not sources of funds for development equal the cost to build the home. If not, why is there a discrepancy? A difference can be a cause for ineligibility because having too many sources means the project doesn't demonstrate a need for some or all of the HP. And on the other hand, not having enough sources means the project still has financing gaps that aren't being filled and the project isn't feasible. Are the development costs reasonably and customary? If a line item seems excessive or atypical, we would expect an explanation. For instance, there might be an extraordinarily high local impact fee from the city that we've never encountered. Since no one project is exactly alike, we try to understand all the different set of circumstances surrounding each one. We also verify whether benchmark deviations are explained. For example, potential homebuyers shouldn't pay more than 35% of their income towards their monthly mortgage payments. If exceeded, we would need a good explanation from the applicant. And for construction of new units that do not involve self-help or sweat equity, as mentioned earlier, we require a market study to demonstrate the marketability of the units and that the projected sales prices are reasonable. If sales proceeds from the market rate homes in the development are expected to provide a source of fund for the affordable units, we'd also want to see that these units are feasible and the projected sales prices in line with the local market. A couple of things to mention on the financial workbook. Please use the version that comes with the application packet you download. You should see version 5.6 in the top right corner of each worksheet. Instructions and notes on completing the financials are included in the workbook on the first tab. We strongly recommend that you read this prior to completing the workbook. Worksheets should be filled out sequentially, starting on the second tab of the workbook with the targeting and financing sources. The worksheets are all connected, and figures and amounts are automatically pulled into other sections of the workbook. You can only enter data into unshaded cells. The shaded cells are locked and can't be altered. Again, review the worksheets so that they are accurate and consistent before submitting them. Please make sure that the sources in the workbook match the source documentation provided. Note that we rarely allow changes to the workbook after it has been submitted. Okay, now Samantha will review the actual owner worksheets with you.
Thank you, Brandon. Please enter the current 50% or very low AMI levels adjusted for family size based on the 2026 HUD income limit guidelines, if available. If HUD doesn't release the 2026 income limits by the deadline, use the 2025 limits. Note that tribal projects may use NAHASDA or other alternate income limits that are more appropriate for their area. Enter the number of proposed units for each AMI target level and configuration. The AMI data on each unit is linked to the targeting self-score worksheet we provide in this financial workbook. If you already have identified homebuyers and know their family income, still only input their percent of AMI. The worksheet automatically calculates the family income, and it is okay if it is not exact. Enter number of bedrooms and assumed family size and financing sources such as the amount of AHP per family, any buyer down payments, and first mortgages. If applicable, indicate which units are reserved for homeless or special needs. The number of units reserved must be consistent with the homeless or special needs application scoring categories to receive scoring credit. Select the units for whichever category the project is seeking points under, either homeless or special needs, not both, per the scoring guidelines that prevent double dipping in these categories. Indicate the terms, rates, payment terms, and status of funding commitments for each funding source for homebuyer purchases. Documentation of approved sources of financing must be provided. Enter sweat equity hours if applicable. This would be mostly for Habitat or USDA self-help projects. If the sponsor is providing discounted financing, for example, 0% mortgages, indicate yes in the box and complete the discounted financing calculation worksheet. If the project is a self-help project financed by the USDA RD 502 program, indicate yes in the box. Any additional payments for second or third mortgages must be calculated and entered manually under other payments. Enter other applicable items such as taxes and insurance, homeowner dues, etc. Other items to note. To ensure consistent and reasonable rate assumptions, interest rates and spreads should be set in accordance with the interest rate assumptions guidelines, which can be found in the reference manual. Total purchase price figures auto-populate in the development budget to compare with the total development costs. We are looking at what the applicants are selling the homes for and seeing if the housing expenses are reasonable. If there are too many sources, there may not be a need for the AHP. And if there are too few sources, the project may not be feasible. This worksheet collects data required by the Federal Housing Finance Agency. Please indicate which sources are applicable to the project. This is only relevant to permanent financing. Exclude construction and bridge financing. Include HUD, USDA, and VA financing under other federal housing programs. If a source does not fall clearly within the listed categories, select Other. Select the building type: condos, single-family homes, or townhomes. Enter the average square footage per home. Enter the acquisition costs and development costs by line item. Explain any discrepancies or differences between sources and uses of funds in the space at the bottom of the worksheet. There are situations where financing sources are not required to be secured against the property and will not be reflected down the road in the HUD-1 settlement statement. If you have a situation like this, include the non-mortgage financing sources in the line item provided so that sources and uses at the bottom of the worksheet equal 0. Ensure acquisition cost is consistent with readiness and donation sections of the application and that documentation is provided. List cash items only. Do not include non-cash costs, which are in the budget as both a source and a use, such as volunteer labor, pro bono services, or expenses to be reimbursed. Include site improvements under the on-site and off-site improvement line items and not under land costs. The construction management, sponsored, managed, and project-specific line item should not include other overhead costs, those that are unrelated to construction. Include all overhead costs in the developer fee line item. Documentation for construction management costs will be required at initial monitoring if the project is approved for an award. Closing costs are those to be paid by the developer, not the home buyer. For self-help projects, if a lot is sold by the sponsor to the homebuyer for a sales price that exceeds the cash cost to purchase and develop the lot, the difference between the sales price and the cash cost is considered developer fee. Feel free to add any comments on any item in the workbook in the comment box at the bottom of this worksheet. If the sponsor is providing discounted financing from homebuyers, then you will need to complete the discounted financing worksheet. For example, Habitat for Humanity sponsored projects that provide 0% mortgages directly to homebuyers would need to fill out this worksheet. Total adjusted sources of financing must equal total uses. This worksheet ties to the scoring of promotion of empowerment. No empowerment points will be awarded if this worksheet is not completed. Include sources of revenue that will be used to pay for homebuyer programs or services. Include all expenses related to those services. Total revenue minus total expenses should equal 0. The base information for the benchmarks worksheet will be auto-populated for you, except that you will need to manually compare your project's information with the benchmarks for interest rate assumptions found in the reference guide. Provide detailed explanations for all benchmark deviations, such as requirements of other funding sources. This worksheet is intended to help you maintain consistency between data in the application and data in the financial workbook. When you have finished filling out both documents, click the Run Comparison Now button to identify any inconsistencies. If any errors are noted, fix them and run the comparison again to make sure the issue is resolved. That concludes the need for subsidy and project feasibility review segment of the presentation. The application package is on our website. The form to register for the secure portal access is also on our website. In fact, you can register for an application workspace on the secure portal right now in anticipation of applying. If you have additional questions beyond what is covered here, please contact one of us and we will be happy to help get your questions answered. Note that there are 2 sets of contacts, one for setting up your secure portal workspace and 3 contacts for questions about the AHP application scoring and feasibility.